Cyber insurance is increasingly vital for businesses operating in today's digital landscape. The escalating frequency and sophistication of cyber attacks demand a proactive approach to risk management. This specialized insurance functions as a crucial financial safety net for organizations. It aims to mitigate the substantial costs that can arise from various cyber incidents. These include devastating data breaches, crippling ransomware attacks, and other forms of digital disruption. Companies are purchasing cyber insurance to protect themselves against significant financial repercussions that could otherwise jeopardize their operations and solvency. A primary benefit of cyber insurance is its coverage for the costs associated with investigating a breach. This often involves forensic analysis to determine the extent and nature of the compromise. Policies typically cover expenses for notifying affected customers, a legal requirement in many jurisdictions. Legal fees arising from cyber incidents are also commonly included. This can encompass defense costs if a business faces lawsuits from customers or partners due to a breach. Furthermore, policies may cover potential regulatory fines imposed by authorities for non-compliance with data protection laws. Business interruption expenses are a significant component of many cyber insurance policies. This coverage helps compensate for the financial losses incurred when systems are down due to a cyber attack. It provides a safety net for lost revenue during periods of operational disruption. Some policies also provision funds for ransom payments in the event of a ransomware attack. This allows businesses to regain access to their encrypted data or systems. However, it is important to note that the practice of covering ransom payments is increasingly debated among insurers and policymakers. It is crucial to understand that cyber insurance is not a complete solution or a panacea for all cyber risks. These policies come with specific limitations that define the boundaries of their coverage. They also include various exclusions, which are circumstances or events not covered by the policy. Most policies require specific cybersecurity practices from the insured business. This means that eligibility for coverage often hinges on maintaining a certain level of security hygiene. Businesses must demonstrate adherence to these stipulated security measures. Common exclusions include acts of war, where damage or disruption caused by state-sponsored cyber warfare may not be covered. Pre-existing conditions are another frequent exclusion. This means incidents that occurred before the policy's effective date are typically not covered. Some policies may also exclude attacks originating from specific countries or regions deemed high risk. Furthermore, policies typically have defined coverage limits. This represents the maximum amount the insurer will pay out for a covered incident, regardless of the total damages incurred. Cyber insurance provides essential financial protection against the unpredictable nature of cyber threats. It aids businesses in recovering from devastating cyber incidents by covering many of the associated costs. This financial support can be critical for business continuity. The presence of cyber insurance can also incentivize improved cybersecurity practices within an organization. Insurers often mandate certain security measures as a condition for coverage. This encourages businesses to strengthen their defenses proactively. Meeting these requirements can lead to a more robust security posture overall. It transforms insurance from merely a reactive measure into a catalyst for better preventative action. This symbiotic relationship benefits both the insurer and the insured. Despite its benefits, cyber insurance does come with certain disadvantages. It can be expensive, with premiums rising significantly as cyber threats evolve and claims increase. This escalating cost can be a substantial burden for some businesses. Furthermore, coverage may not always be as comprehensive as a business might assume. The nuances of policy language and specific exclusions can lead to gaps in protection. It is vital to scrutinize policy details carefully to understand what is truly covered. The claims process itself can also be complex and time-consuming. Businesses may need to provide extensive documentation and evidence to support their claim. This can add further stress during an already challenging period following a cyber incident. Cyber insurance is a valuable tool, but it is not a substitute for robust cybersecurity defenses. It should be viewed as a component of a broader, comprehensive risk management strategy. The best defense against cyber threats remains a strong offense. It is crucial for businesses to invest in proactive security measures. This includes regular employee training on cybersecurity best practices and the implementation of strong password policies. Regular security audits are also essential to identify and address vulnerabilities. While cyber insurance provides financial support after an attack, it does not prevent the attack from happening. A proactive approach to cybersecurity, focusing on prevention and detection, is paramount. This includes implementing multi-factor authentication and maintaining up-to-date software. Ultimately, cyber insurance serves as a critical financial backstop. However, it must be integrated with a foundational commitment to strong internal cybersecurity practices. This layered approach offers the most effective protection against the ever-present threat of cyber attacks.